investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. We're looking at the Dow, 367 at 32,188. The S&P is up 64 at 39.20. The QQQ, the reason why I'm going through this quickly, I want to show you the 1 minute and 10 minute charts in the E-mini June contract. S&P is up 540 at 296.08. IWM is up percentage-wise a little bit more than the others, up 5 at 178.36. Gold is down $8, holding really nicely after a fabulous 3 sessions to the upside. Part of the XLF crashed to the downside. Today, the XLF, which is the S&P for Select Financial Spider Fund, is up 2.4%, up 77 cents at 32.40. Some stocks, what was that one? RFB? RFC? Yes, that's right. I think it's RFC. Oh, man, it's not. Reliant, what was it called? I'll find it in a moment. The Reliant, what bank was it? I'll talk about it in a second if I can find this. There we go. That is FRC. FRC. FRC is up 48% at 46.40. Wow, that's what happens when the cork, when you push a cork in water and then finally you let go, it just bounces quickly back, tries to get to the surface. We'll see if this one can get to the surface. Looking at silver is, let's see, holding very well. It's only down 0.03 at 21.89 after a really fabulous session yesterday because it was doing very good. Stopped dead at the 200-period moving average of 22.08. It's at 21.89 right now. Just want to get these done. Platinum had a big move up, peak A, peak B. This is leg C. It's at 993, down minus 11. I wanted to go to crude oil. Crude oil is down 64 cents at 74.17 in the lower range. Looking at natural gas, people had asked me what I would do natural gas today. Yep, natural gas is down 0.05 at 2.55. It's just really struggling. That moved to the upside 2.5, 3 weeks ago. That was really good, but it was nothing like you would see if there was an explosive move to the upside to have the shorts just decimated. No, it didn't work that way. Looking at, here we go, looking at U.S. bonds. Bonds are down today over $1.20, $1.21.30 at 129.28. That means that the yields, so this means the TBT, look, the TBT is bouncing strongly up 90, and that's yields, 29.37. Oh, I didn't do that, the triple yield chart. I'll show you in a moment. I just want to finish this up. I did everything I wanted. Yes. Now let's just go to this. So after the intense selling that we've seen for days and days and days, sometimes when the tide turns, even if it's just on the very short term, what you have to anticipate is that at a certain point, the sellers are just done. They are just done. Thank you. All those of you in the den, while I was busy hunting for the chart, you put in the symbol. I already got the symbol. So look at this. Here's this move at 8:30. So let's just go back here. I want to show you this on. It's a really important because the 39.34 level is going to be really important this morning as 10-minute support. We're already past the 10:10 area, so now we can extend that to 10:30. So what we're looking at here is, oh, it failed. Oh, that is so fantastic to be able to watch this in real time. So here's your 8:30 news with the inflation. Inflation was still, pretty high. So what happens is the market tries to rally and then it slumps. And the E-mini, I love these particular sessions. It's better to watch them, to trade them. If you're lucky to get it at the right time, you just have to have your fingers have to be like you're playing a Stradivarius there. You got to move your fingers at a lightning speed. Or the Rachmaninoff third piano concerto. All right, what we're looking at here is it slumps down to the 39.85 round number level. And no, it actually goes, no, was that 85? Yep. And then screams up. The same 1 minute bar screams up and then stalls at 39.39. I mean, almost 90 points. That's incredible. And then it pulls back. But look what happened. Is this going to be a 2-click session with that being the low and now with the green 9-period moving average way over the 14-period after intense selling? And look at this rectangle. Remember, rectangle formation can last a lot longer than your patience between the 39.12 area and say 38.90, actually a little bit below that. But look how it's stuck in the range from yesterday's close around about 3 o'clock when we dipped down, and you had the peak A, B, C, D, E, F, G, and then it pulls back. Then you've got A, B, C, D, E, alternate count. That now turns out to be, it couldn't even be an F because it went lower than before it went to the high. So I put a question mark there. Every once in a while when you get the 8:30 report, just the wave count can change. That's the one time that you got to be ready for some kind of 2 times. The other time is when you're looking at the VIX index. That's where it doesn't it's not beholden to the Chapman wave methodology. So here we are looking at this double top that was made. And what I did is I drew in, I think the folks in the den saw this. I actually drew it in live. We made this peak F top right here. We pulled back. I drew the large rectangle. What's the large rectangle? I like to look at certain patterns that repeat over and over and over. So I spoke about the narrow rectangle a little earlier on. I spoke about that in the 10-minute chart, how we stuck in that range for so long, then went to the bottom of the range. Then we soared to the upside, broke up above it, the resistance. Now the large rectangle is kicked in. So that's the square. And that can form a down move and then an arch formation where the price fails underneath the previous high, or it can go sharp move up and then a sharp move down, then it starts higher highs and higher lows, and it can get to a peak D or a C or D right on, just under or right just above the previous high. That's the flagpole high. And then it breaks down. And if it takes out halfway into the rectangle formation, just like it does in the large, long, narrow rectangle, so you can see a test of the bottom. So now let's see, where are we? What we've done is we went to the cup formation, went to peak A, peak B, peak C1, C2. I don't want to explain that. We'll do that maybe on a technical Friday. So in the Chapman wave, the peak 1, C2 says sometimes you can make that peak 1 and then that peak C1 and then peak C2. And then if the technicals hold, you can go above that. So it acts like a peak D, but it says maybe we're not quite finished and we still need to get to a D, or we're just stuck in a range. So yeah, we are. Now we're stuck in this new range. And that's why I said 39.34 down here will be key. If you break that at any point to the 10:30 time frame, that's going to be bad. But I think that the selling has been so intense that the tide has changed, at least for the next day or two. The tide is up. We've done with the selling, and now any selling will be very brief as new buyers come in. That's just the way I'm looking at it for the day. Up 64 in the E-mini at 39.63. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Well, folks, so one of the reasons why I like to break up the market into segments, it's not really it can't really be a fixed time because every day is different. There are different contingencies that you got to be looking at. So what I would consider is that early in the morning, I'm talking about 2, 3 o'clock this morning, that's when the real turnaround of the market started. And that break, that was where it was in the rectangle formation, went through peak G just above the previous major high of that long rectangle resistance. They went under it because it broke the halfway marker. Let me just put this in here as a halfway marker. There we go, right. Where did it go? I got the vertical one. I lost it. Don't tell me I lost it. Oh, there it is. Okay, right there in the middle. I do it by eye. Okay, make it nice and thick. Make it blue. Make it thick right there. Wait. Okay, so it took that out, and then it broke out to the bottom, and it went underneath the rectangle. The rule of thumb is that if it breaks down sharply, it can go back, retest inside usually that blue line, and then if that fails, it goes even much lower. But if it holds and starts to trade above it, now you're looking at the top part. Well, the top part, coincidentally, right at that leg D right there, it could be a brand new ABC, but that was a peak C, so that's a D. And you can't make that an instant restart because that sharp 830 pullback broke the starting point. Once you break the starting point of the buy signal, you have to start all over again. So that is a question mark. That isn't an F because it made that high after making the low. And it's not an A because the bar that makes the low cannot be the high except at an instant restart, peak D. So that's a question mark. Now starts leg A. So there's your A. And so far, in 30 minutes, 40 minutes, we haven't broken above that peak A at 39.6756. And now you're kind of trapped in this rectangle. Trapped doesn't mean to say that it has to plunge. It just says it's stuck in the range, and that range just basically says it's getting smaller and smaller, and you'll know when it breaks out because at this particular point in the E-mini, this is the June, 39.47 is probably the low to watch because if it takes it out, it'll probably go to the bottom part. and I'll put that in right here. Let's make this as well. I don't want to make it a big one because it'll mess up the charts for a while, or it'll just stay there. So this is kind of, it's a little lower than that. Let me go down. Yeah, right there. So that's my halfway point, 39.49. We're watching it closely. So far, it's holding very well. So the question comes in, for those people who are still adamant that the market is going down, you could be right. But on a very oversold basis, you've got to look at some kind of buying power that's come in as a change in the modus operandi of everything has said, sold out on the downside. Now we're looking to buy. That's all I'm saying. I'm not saying huge trend change. I'm talking about a minor trend change. One of the reasons why we went long this morning, pre-open, was because I said there should be an oversold bounce. And if by 10, 20 certain levels are holding, that's great. So far, they are holding. So I would not be looking to short. Question came up about the, I can't even remember what, NVIDIA. Look, NVIDIA, fantastic company, had a huge pullback. I don't want to go into, I'm looking at the 1 minute chart. And what I've drawn is, here's this rectangle. And if it breaks out above it, you've now raised the base of support. So you went to a peak. In the Chapman wave, you're always looking for a buy signal to be upgraded to a buy mode, meaning there should be at least 4 higher peaks going to peak D. Well, you got it once in the 1 minute chart, you got it twice in the 1 minute chart, and now it's breaking out. I would even suggest that there's a chance that this, I had said 239, what did I say, 239, I put in here, no, I can't find it. 239, oh, there it is. 239.87 level is, if it goes above that, that's really a very important moment. And now look what you've got. This is not really looking like a leg F in the 10-minute chart. You've got one 10-minute chart, peak D right there, and then another one right here. So once again, like the 1 minute chart, you've got your D, pulls back. D is where you expect other things to happen. You've got a D, it pull back. But now this breakout looks more like F/B, alternate count. This looks like it's acting as if it's a B, not a D or an F. So I put in F/B, alternate count, and I'm suggesting that the MACD stochastic, the 9-period moving average, the 14-period moving average, the 200-period moving average, everything is positive, at least for the moment, in NVIDIA, just on the 1 minute and 10-minute charts. Now look at this, EHM, 2-3, get used to that, ESM. So we've decisively gone. Now this could be a D. I'm going to put in a D here because that's the obligation of C1, C2, the next higher peak gets the next letter. But also there's a chance that it's D/B. Why? Because the MACD is good, stochastic's way at 93%, so that's fabulous. On balance volume's a little overbought, and the 90's over the 14. You've got nothing here that says be real careful. And what it does say is that, this is the 1 minute chart, of course, and what it does say is that is a B. There's no other way I can count it. If that's a B, today in the 10-minute chart, we should still see a peak A, a peak B, a C, and a D. And then we'll see what happens. All right, so it's only a 10-minute chart, but it's confirming that this is a buy mode from that low that was made at 39.85 round number. And now we're doing very nicely to the upside. All right, I'm done with that. Now I've got a couple of questions that I need to go to. So the question came in. Let me go one at a time. Bank of America. Basil, we've been in Bank of America at least 6 or so times in the last 7 years. This time you've held off. Are you at all interested now that it seems like the big banks are going to have big protection? So the answer is, I thought about it very carefully. And then I said to myself, the depth of the move down, it was starting beforehand. Something else is going on with Bank of America. And within that context, all I can say is I prefer to step aside. There are other banks money center banks that are doing well. Let's see what JP Morgan's doing. JP Morgan is holding most of its gains so far, because so far it's a Chapman wave Roman candle, but we don't have to go into that because the day's not even an hour. We're 1 hour into the day, so we can't even talk about that. But I tell you something else. I want to talk about. I'm not going to talk about either the morality or the technicals or the legal side of what just happened with the Fed. I did tell you that on Sunday I heard a guy wrote a book on Janet Yellen, and I felt that, in a sense, he was doing what he thought was all his homework, but there was a part that I could hear just from the speech pattern that he was married to her in a very, he was more biased towards favoring her than not. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Our vote is back, and I'm just typing in equities. So I had a question. Basil, would you invest in Greenlight Capital, and they invest in corporate equities, and trading at $9.92, had a big spike up to the 10.40-50 area 4 days ago, pulled back pretty sharply to about the 9.50, and now it's trading $9.92. So I would suggest to you, and that's David Einhorn, very well respected, founded in 1996, very well respected fund manager. But based on the patterns that I'm looking at, peak A, peak B, C, D, yep, it did that in the monthly chart, now brand new, A, B, C, and another D. And D is where it can go for 2-3 months and then pull back. I must say I like everything about it because it's showing an almost inverse to the market move. So this is what, and I know that the questioner in the den likes the longer term. I'm going to say yes, only because I believe just from the chart pattern that I'm looking at that it shows that this is a person that does due diligence, and once it's in an up move, it stays in an up move for a while, although it is at D that you've got to be a little bit careful. Let me just put that in right now in the monthly chart. And it has been way high. It's been up in the 20s just even a year or so ago. I must say, if they really do due diligence, then I think this is an area that is fraught with potential for the upside and the downside. But they seem to have survived up until now. So I'm going to say yes, at 992, a starter position. Let's give it, I want to see how it closes Friday in this particular market, because how it closes Friday is going to tell me whether they are deep in the thick of correct type of analysis for this particular environment. And I'm just going to say yes. But I would not get carried away. I would start a position. I'm not even going to tell you how much to start it. You know how to get in. But I like it. The target on the left side is the high that was made back in November. Yeah, November 1919 of 1126. That's a good percentage from here. So I'm going to say yes. It's not for everybody, but I think you also do your own due diligence. And I'm going to say yes. So that's with, you got your capitals up there. That's why are you doing Chapman wave notations there? That you got your uppercase on the way up, lowercase on the way down, peaky? All right. So I'm going to say, I'm going to put it down here because I want to look at it. GLRE at 992. This is 3/14/23 at exactly 10:33 in the morning. The reason why I'm doing that is I want to be able to monitor how it's doing from this moment on. This is really important. So remember I said I like to look at the different stages of the day, and they aren't really fixed in time because a lot goes on. But you can kind of put them into the category of going towards 8:30 in the morning, how it survives, then the 8:30 to the 10:20 or 10:30 time frame, and then new buyers. I'm not going to say the real buyers. I think things have changed so much lately that you can't have the pattern. You can't be in a parrot way, just say, oh, yeah, now you get those people that are novices that trade the first hour. There are a lot of professionals trading the first hour in many ways. So I'm just going to say that GLRE, Green Light Call, this is almost like looking at the day where it starts off, opens at 985, drops to 965. That's a big percentage on the downside. I'm just talking about percentage. And now it's trading at 992 at the high. And that says yes. And I'll bet there's not that much volume. Yeah, there it is, 37,000. Oh, it's not too bad. But it's really, I mean, on a day it does 200, maybe 280, 290,000. That's really not much. So the person who asked me the question, Peaky, you understand all these little parameters that I'm looking at. So, okay. Next question was, where did we go? I saw it. Was it in my email or was it? Yeah. Okay. So I wanted to talk about SLX, which is steel. So the question came in yesterday. Is steel going to, is the SLX that you showed us the other day, is it going to hold the trend line? So Joe, all I can say is this. I love these trend lines, but that's all they are. That's not telling you the market or anything, but it's giving you really good clues. It tells you the path that we're following. So yesterday it went underneath the inside track propellant zone, Van Eck Vector Steel ETF trading SLX trading at 63.71, up 92 cents right now, and it went under it. It went below. It hit 62.01. below the trend line support, 62.01, and now it's almost 2 points higher. My concern here is that I'm seeing a reflex action of this oversold condition, and that some of these patterns had already made a peak D in the weekly charts. They had fulfilled everything that we had looked for. We did have USX, we don't have it right now. And 70.43 back in April, the week of the 22nd, plummets down to the 46 level, screams up to the same area, 70 point, what was that? Should have typed that in. I think did it just hit 70? There it is. So we're at 70 on the, why am I having trouble here? There it is, 70.38 on the 3rd. Let me put that in, 70.38. And look at how many double tops. Did I say 78 on the 3rd? Oh, jeez. 23. And then it tumbles down 8 points. That's 11%. So all I can say is I think that it needs more time. I'm not that sanguine about the whole area of the market. I think we're going to see a nice bounce, and there's a chance that this makes a U-shaped pattern. In other words, I'm not sure yet. Now, I'm going to talk about this. I want to wait the whole day. So I'll talk about something else a little later on, which I think is going to be a big clue for me. And it has to do with one of the brokerage houses. And I'll talk about when I'm interviewed with Tom O'Brien this afternoon at about 3:15. I want to see what happens at least into the late afternoon. And it's going to be very important. It has to do with my Chapman wave volume price spike low. If this is going to be the case for this particular position, this particular instrument, it should rally for 28 sessions, not take out the low of yesterday. And it had a round number low. So we'll talk about that later on. So anyway, I'm going back to look at the Alcoa. So this is the deep cyclicals. It's a bounce, but it's making lower lows and lower highs. And look at the arch formation that's forming. So I'm a little concerned that we are now out of our PAVE position. And these are all part of PAVE, I believe. And what we're looking at here, PAVE, is the ETF that I always bring up, having a very nice rally today, up 68 cents at 28.26. But it made an alternate count. It looks like this is a peak F top in the weekly chart. I just have to respect that. So I would have loved to actually have stayed in for another couple of months. I might get back in for subscribers. But I just think that this is telling me that there was some damage done, technically, to a lot of issues. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So remember we spoke about the peak C1, C2, then we pulled back, and I said that could be an A and this could be an alternate account D/B, but the technicals are still strong, and it went to C, D, E, and an F right here. This is another one. Look, within 3 bars, you made, no, you didn't, so it's 4 bars. We'll see what happens here. But this makes the 39.57 area key support in the 1-minute chart. This is still a leg B in the monthly chart, in the 10-minute chart, and we're looking to see if 39.65, let's call it 39.66, can be broken here rather than dipping underneath 39.58. Just as I said, could be a 2-click session, with that being the buy signal. And right now in the 10-minute chart, yes, you've only got leg B, but the MACD is strong, everything's strong. The on-balance volume is just a tad overbought. We'll see what happens there. That's the reason why I'm saying you had all the opportunity in the last week and a half to short. Now it's more like just get it out, at least for me, just get it out of your mind, because the tide in the very near term is you got your oversold position. It's like the elastic band has sprung just too far. Now it needs to come back a little bit, and that's what we're watching. ABAS, this is Arbutus Biopharma. Yes, Dan, it is up 8 cents at 304, up 2.7%. It is in that leg E. It held the 200-period moving average. Just amazing how it has used this for weeks now. It's like a springboard, and it keeps trying to make new recovery highs. It doesn't get very far, but it is making it. It's a leg D in the weekly. The monthly chart is in leg B. Just that's a horrible-looking chart. But certainly on the daily chart, look at that. Wow. Nice. Okay. A couple of questions about the pharmaceuticals. So PFE took over a company the other day. It's up 12 cents at $39.99. This is Pfizer, multinational drug company. I have to tell you, when the drug companies are on fire to the upside, there's just nothing that can stop them. When the tide turns, wow, it's brutal on the way down. I mean, look at this. Talk about brutal. Look at that weekly chart. There's not a single leg A to the upside from the moment it made the high at 55, was it? 54.93, the week of the 12th of 12. PFE, Pfizer, hasn't had a single leg A. I think this is attempting now to get its first leg A in the weekly chart. If it can, by Friday, get above 41.26. At 41.27, it starts a gray leg A. And here it is at 39.99. Oh, what horrible action. Other things I said, yes, I would look at Uri. Oh, no, what did I do? Oh, gee, I hate when I do that. It just pops up, and then you click, and you're not looking, and you've changed the parameters. Let's see if it all works. Please, please, please. Yes. So Uri, United Rentals in construction equipment, and this is another reason why I'm thinking this is a counter trend rally. I don't know how high it's going to go. I do know that I've got parameters in my mind, but I need to see today. I want to see a nice close over yesterday's inverted Chapman wave Roman candle daily chart. And if that's the case, that says, yeah, we can go a little bit longer because we are extremely oversold just on the very near-term situation. So, Uri, oh, there it is. That's what I did. Oh, I hate when I do that. Okay, I'll change that later. Uri. No, I'm going to change it right now. Hold on tight because I need to do this. Click, click, click. Come on, click, click, click. Yeah, last. No, I don't want the last. I want the analysis. Oh, come on. Last. What goes in between the price, time, in the exchange, description. Oh, there, description. I think that's the one. Do I not have description here? Oh, please don't waste my time. Okay, last. All right, I'll leave it for now. I'll change it later. You see this L, that should not be there. That should have Uri and the weekly. So I'll change that. So, okay. So Uri is just not doing very well. And that's construction equipment. That just tells me about the inner workings of the marketplace, the economy, etc. If you put it together, I like to mix it up with Alta, only because Alta is the one that says, if you don't make a new high above the 537.82 high of the 23rd of February, you're taking a bit of a digestive phase. I'm talking about Uri, right? I'm talking about Alta. Alta Beauty Inc. Alta is trading right now at 524.42, up 10.74. It's still making the H pattern. It held the left side low quite nicely. The low was 511.08. 510. So we've gone to a leg C. We did take it up, and now we try to rally above it. So that's important. I'm watching this because overall I've said I don't see how Ulta Beauty will really smash to the downside unless something's going on that is way deeper than the overall economy, because beauty products, only when the recession is very deep and been going on for a while will people finally give up those beauty products. And here we are, just a digestive phase. What it was about 3-week phase right now of digesting gains. If you look at the weekly chart, nothing to see here. Still look great. Monthly chart looks great. So we'll see. But if you start to see Uri trading under 508 would be the number. I'm going to make it 504. If it starts to trade under 504 at any point, that's just saying, hey, this market might be in for a deeper pullback. All right, that's that. The next question I had was, IYT. IYT is the transportation index, Dow Jones Transportation Average Index, and that's just saying that at 226, with a high just recently in February of 240, was that 47? I just can't remember offhand. I looked at it the other day. I forgot to type it in. 247.86 on the second. Let me just type that in so I've got it. 247.86 on the, I think I remember. 27, I think. Oh, no, 20. There we go. So look at that, 247 down to 220. That's 27 points. That's 11% or so. That's serious. But I do believe that we've got to watch these aspects. IYR is another one. IYR is the REITs. Is the United States REITs index or ETF. It comes all the way down from the 95 or 96 area down to 82. That's a big pullback. And a peak D in the weekly chart. I was looking at CCI, and I thought, this is actually holding the bottom. Is this going to rally or not? I'm watching it closely. This is Crown Castle REITs. This is Towers. It usually does very well, but from the December 2021 high of 209, it's plummeted down to 121, and now it's only managed to rally. It did go to the 150s, but pull back, and now, so this is telling me this is such a selective phase. Okay, I just want to show you this right now. One of the reasons why we did go long, the 3 times long position this morning on the Dow, is that I think that we are so oversold that there should be buyers coming in today, at least, maybe into tomorrow, on every little pullback. And we're going to see that in the next hour. I'll be back in a moment.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So this is a very selective rally, but it's really important that everything that we're looking at here says just on a very short-term basis, don't be surprised if buying begets buying. So this can't be an H because there's never an H in the Chapman Wave methodology. So this is A, B. This has to be called C right here. And the 9's holding over the 14. This is a leg B in the 10-minute chart. I suspect over the period of the day, it might take a little while. It could be very short. It could be 30 or 40 minutes, but we should be getting leg C and then leg D in the 10-minute chart, and then we got to see what happens. So with that said, just very short term, looking at a good rally and a rally to be sustained into the close. We'll see what happens. But stay tuned because Steve Rhodes coming up. He'll do a great dissection, I'm sure, coming up. And programming all day. I'll be back with Tom at about 3:15 this afternoon, and we'll talk about my Chapman Wave volume price climax reversal. I'll be back tomorrow. Oh, I'm beating the music. That's a little unusual. So let me just say the VIX index should be sharply lower. There it is. Oh, sharply lower. It is down 22.49 after hitting 30.81 yesterday. This is going to be very interesting under the 200-period moving average. So that's going to be important. If at any point it starts to move into the 2360s, you'll see some selling going on. But in the meantime, back at the ranch, I am 10:55. Oh, I looked at the wrong clock. Oh, plenty of time. Here we go. We're looking at that. And then a quick question came in. Basil, could you look at, what was it? That was the, yes, a bond. What a bond's telling you. The TLT right now is telling me that rates have spiked a little bit higher, but the market just now is oversold for other reasons. And of course, with the whole bank thing going on, it's pretty good. So have a great day, and we'll see if the market holds. And with that said, see you at 3:50 today or tomorrow. Check out both. Okay.